Welcome back. Digital infrastructure is widely recognized as the fundamental backbone for rapidly advancing financial inclusion across the African continent. It is the crucial link that connects previously unbanked and undeserved populations, particularly those in rural areas, women and small businesses, to formal financial system. Now, let's unpack this with Director of the African Center for Development Finance at Stellenbosch Business School, Professor Elizabeth Nanziri. Prof, a very good evening to you. Thank you so much for your time. And I guess, this is a key theme that will be coming out of the G20 as well. How do you define digital public infrastructure in the African context? And what is it? What is its most critical pillar for achieving mass financial inclusion?
Thank you, and good evening to your listeners. In regards with financial inclusion, as you say, massive financial inclusion, I think we are moving away from physical infrastructure, getting into digital financial services for so many reasons. We are all becoming digital savvy, and our youth, especially, who are usually excluded, they are digitally savvy. So this is actually an opportunity for us to include them, if and only if anyway we can get them employed so that they have some funds to start with. Because if you do not have funds, you will definitely not be able to use financial services. So when we talk about digital infrastructure, what are we dealing with? We start with not only like the frameworks, so you start with your gadgets that you use. For instance, the cell phones, we need to have connectivity, right? And that is one of the challenges that Africa or the African consumer and child finds themselves in. They do not have connectivity, but if we have to use digital services, we need that. That's the first thing. We also need the regulatory framework that allows us to use these digital platforms in a manner that is safe. So we're also talking about laws or rules and regulations that are going to help us ensure that the consumer is protected, that is being protected from fraud and all sorts of issues that come with digitization. So we have the regulatory framework and the infrastructure that is related to digital. So those are the frameworks that we are initially looking at when we're dealing with digital.
You're also speaking about the African continent in particular and some of the hindrances there. And I just wanted to know, Prof, how does the lack of reliable power and energy infrastructure, especially in rural areas, directly impact the adoption and sustainability of digital finance services?
So that is important, and that's a challenge actually that comes, or that we have seen, especially in East Africa, where we have that M-Pesa model that we're all familiar with. Remember, you need that cell phone to be working, and one of the ways it is working is if it is charged. So without rural electrification, that is a challenge that even though they have a cell phone, if it is not charged, there goes their bank, the wallet that they are holding. So we have to think about the interconnectedness of sectors here. And so one of the issues that we're looking at, and we're hoping that our policymakers can look at seriously, is the fact that there has to be public-private partnerships. So there are partnerships across sectors. When you talk about digital financial services, you have already given me one sector, that is electricity. There is another sector, which is telecommunications, because we're using the cell phone. Add to that the financial sector itself. So those are already three sectors. Now, if our policymakers cannot realize that they have to be working together, that if there is no electricity, we are actually saying that the rural person is excluded, I think that is not going to help us realize the benefits or leverage the benefits of financial inclusion. And that is a challenge for now. And the rural areas are already disadvantaged, that the brick and mortar type of bank branches, ATMs, are already not there. And so the digital framework or platform is their only way out. So we need to think about, yes, those interconnectivities within the sectors as well. So thanks for bringing that up.
You spoke about rules and regulations as well a little bit earlier, and I want to also touch on that because I want to know what is currently the greater bottleneck to financial inclusion in Africa? Is it the availability of the technology, or the enabling or lack of enabling regulatory and policy environments?
Right. So currently we are quite fragmented, and what we don't realize is that the Africa and the globe are becoming one. There is a lot of integration. So the issues that we have currently are the lack of streamlined, harmonized financial systems or regulations that allow for services across borders. So when we talk about an enabling regulatory framework, what we want to see is some form of a streamlined regulatory framework that will allow harmonization, streamlining of cross-border financial services. And that is not far-fetched, seeing that we're talking about, for instance, the African Continental Free Trade Arrangement. How are we going to move goods if we are not speaking to one another, even though this is on the goods framework or the goods front? We're talking about e-commerce, where e-commerce also uses digital. Now, without a harmonized way or structure, we're still going to have challenges. Another regulatory framework that we have to consider, is related to consumer protection. We need our consumers to be protected. So what are the consumer laws? And what we would like to see, for instance, coming out of the G20 is if they can come together and at least put together a framework that all countries can at least follow. We saw this coming out of the financial crisis, the Basel codes, Basel principles. There were many. Each country selects what is customized to them, what will work for them. So the regulatory framework is going to look at the physical infrastructure itself, but also the processes. How are the processes going to, to work seamlessly? For all of us, because we are talking about a connected Africa at the end of the day. We want this not only for the consumers, we want it for the SMEs. Can we start working with, for instance, data? How can we get data that we can all use and be able to identify the gaps, that in the end, we can all work towards at least closing.
Yeah, and Prof, you speak about streamlining these regulatory frameworks as well. The digital infrastructure often risks creating or widening this digital divide that we already have. What specific initiatives can governments and the private sector, you spoke about the private-public partnership, can they implement to ensure that infrastructure investments prioritize also gender equity and reach the most marginalized rural populations?
Right, so we can start with at least investment in technology. That is very important by encouraging investments in, for instance, that digital infrastructure that we have talked about, such as improving your internet access and that connectivity, yes, to those rural areas that we've talked about. We can also talk about support, for fintechs in terms of fintech innovations, especially partnerships, as we have said. So let us ensure that at least the infrastructure that we have is also affordable, and accessible, for the individuals that need them or to use them, because that is what it is all about. And I like what you have said, especially women and youth. They've always been marginalized for one reason or the other. Youth are marginalized at the moment because, one, products have not been appropriate for them. One of the dimensions of financial inclusion is quality of the products that we get. Quality means fit for purpose. Are the products that are on market fit for what the youth want? The youth that we have currently are not fully employed, like permanently employed. Therefore, we need to find products that are micro in nature. For women, on the other hand, most of them, one, might not have sufficient financial literacy because they have been excluded earlier on in education. Two, they might not have credit, because they don't have collateral. Many women in Africa do not own or are allowed to own any asset, and this is what they need as collateral. So we need to start looking for products that actually are going to speak to these groups. For women, they like to work in collective or as a collective. So why don't we look for products such as your micro insurance? Quite often it has come towards groups of women as opposed to one. So cooperative banks, maybe now is the time for them to actually flourish. That is, we see women going into the informal sector. Why? Because they're able to work together. We have your Stockfields in South Africa. You have a whole lot of SACCOs, the equivalent of that, rotating schemes. Who are the main players here? They are women. So let us identify these groups and the types of products that work for them. And that way, we can start bringing them all into the inclusion fraternity.
Critical indeed. Prof. Nanziri, thank you so much for sharing your insights with us. Appreciate your time this evening.